The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host on a July 14th. So truly the middle of summer. And of course, last night, a super moon. I saw it last night and this morning out walking the dogs. Always neat to see these super big moons out in the middle of the summer. But I digress. Of course, we've got a market that is up today. It had volume for probably the first 50 minutes and then fell off 1.6 billion shares on the consolidated tape so far, up 10 points on the S&P cash. Been kind of drifting lower, got as high as, 1981, and about 3 points lower. So as we go through the rest of the day, we've got earnings really ramping up, and the market's pretty much priced for perfection. If you would have gone long Wells Fargo, the strongest financial, you would have been pretty much wrong on Friday. If you would have shorted a weaker one, like Citi today, you would have been wrong again. We're looking for some more volatility. And for the most part, a few people die along the way, no big deal. The market is more focused on the pumping it up. Of course, it is options expiration week, so we should expect the unexpected. Got a lot of earnings, of course, this week, and we'll be talking about those later today. But just keep an eye out there and watch. Probably going to find some very, very fast markets, I suspect, this week in lighter volume conditions. The New York Stock Exchange Composite Index, a basket of blue chip stocks that reflects the return of America's biggest stock market. It was launched this day in 1966. Sometimes, for those people that are new, called the NYSE, N-Y-S-E. I think that's just a little too cute. Why can't you just say the whole thing? New York Stock Exchange. I think people are just getting too lazy. But I am, again, digressing. But goes all the way back to 1966. Before we get into the rest of the news, there was some news that I saw this weekend, and I've just got to get it off my chest. And it, if you watched or grew up and watched television in the 70s and probably the early 80s, probably until Miami Vice, the whole thing was how to make a video production without spending a lot of money. Miami Vice kind of changed that, willing to throw a lot more money and to get the right type of people to watch. But if you would have watched just about any sitcom, there were the go-to things. And those kind of things where you got to be quiet and don't slam the door. The souffle will fall. That's souffle humors. I haven't seen anything like that in 20 years, thank God. There were always the other standard things, like someone broke their nose because the door opened, or, there's always the Dukes of Hazzard car chase. Extremely predictable, not really very funny. And, of course, there was always the run over the fire extinguisher and the water shoot up out of the ground. Oh, that had to be great. Not a lot of thinking, not a lot of writing. I think America really started to change probably about mid-'80s. I kind of put it at that Miami Vice period of time. But there were always those chestnuts. They would just go back to and beat them like a drum. They would never change. Now, one of those chestnuts out there was always something that had never happened. And that is, of course, the mortuary always has the hearse, but normally it was more funny because it was a body, not just the hearse, but either one of them, always coming out of the back end of the medical examiner's truck as it went down the highway. Of course, has anybody ever heard of a body sliding out the back of one of those vans because no one closed the doors? Well, I guess I can't make fun about that anymore. It actually happened. But I still haven't seen anybody run over a fire extinguisher plug and the water shoot up out of the street, or all the other horrible things from those 70s sitcoms. But what can I say? It actually did happen. I've seen it in the news. Someone's body did fall out on the street. But what can you say? Other things happening out here. The International Bank of Settlements was out again this weekend, warning again, because no one paid any attention to it 2 weeks ago, about the looming problem. They are really discussing the problems with a bubble and the bursting of the bubble in China right now. They've warned now for the second time in 2 weeks. And Mohammed Al-Arian is also out yesterday, and the former PIMCO chief and current chief economic advisor for Alliance wrote an op-ed in the Financial Times that he sees the world looking much the same way. Stocks are booming in a way that doesn't reflect the underlying economic fundamentals. Also saw somebody speaking this morning. Was it on Bloomberg or CNBC? I think it was on CNBC. He is the head of Trim Tabs. They are pretty much a website that sells data on market inflows and outflows of actual cash. And he pretty much said the same thing. He said, well, this is not an actual recovery. This is a balance sheet recovery in at least the United States. And he said, well, how can stocks go up if it's just a balance sheet? Well, he says, as long as people keep buying, or at least corporations keep buying back shares of the stock, the EPS will go up. And I guess you can pay more for that, but the company's not really getting any better or any bigger. So, pretty good argument, but not a lot of people willing to objectively look at this market and say, is it dangerous or not? You got waved by in about 2 minutes. And I continue to see the people that I respect the most on short selling sides picking their battles, but saying that there are many stocks out there that are probably bubblicious at this time. And we'll do it. Bloomberg was on Al-Arian, somebody in the den said. Rant away, rant away. Okay. As always, you can give me a call at 877-927-6648. You can also email me at path@tfnn.com or pass? How about place a message in the Tiger's Den, and we'll try to respond to it as easily as I can. I am home today, so you can email me at path@tfnn.com, and I'll try to get to it before the end of the show. What else is going on here? Of course, Citi came out with earnings this morning. It was up about 3%. Citi saw its fixed income trading fall about 12% and its equity trading by 26%. So when you think that you have it tough as a trader this summer, there are a lot of very good traders that worked on the street that are now in the unemployment line. Citigroup has announced, of course, a $7 billion fine, and it was up this morning on a combination of things. One, they did a little bit better, and two, it was $7 billion instead of $8 billion. As the one senator once said, $1 billion here, $1 billion there, soon you're talking real money. But I think that was in the 80s, too. Now it's $1 trillion here, $1 trillion there. But they're settling their pre-crisis or post-crisis mortgage practices, pre-crisis mortgage practices. So nothing's new, but we continue to see, with the lack of volatility, especially in the fixed income side, a lot of people looking at that unemployment line. And Citi and most of the other people on the street have announced a continuing layoff program where more of these bond trading can actually be done by algorithm, no longer needs any human touch. But I will move on. PIMCO misses them. Well, of course, what's his doodle went? Trying to remember, Bill Gross went insane. Somebody in the den just said PIMCO misses Larian. Of course, Bill Gross went kind of nuts. And it seems like someone threw a net over him, probably one of those. Why were people, another thing in the 80s and 70s, if you were insane, you were chased with a butterfly net. I don't think a butterfly net was going to stop any kind of total nut job, especially if he had a knife. He could probably cut right through that. That's another thing I miss, the old butterfly net, always chasing insane people around. Now, one of the cases I've been making for about 4 weeks has been that we are seeing a lot of signs of a bubble. And I haven't spent a lot of time on this, but I've gotten a few emails from people, so I will go ahead and spend a little time on this today. CYNK Technology went from 6 cents to 20, within a couple of, a dime of $22. That took all of June 17th to June 10th. And this was one of these classic, apparently, pump and dump phase that got out of control. It was and some people say, well, how can they do this? Well, they get and print a ton of stock. And they, basically do a 10-for-1 reverse split or something. This one was 6 cents, and I think they moved it down from 20 cents. Then they basically acquire all the stock at 6 cents a share. So now they own 99.9% of every share that's available for CNYK. Then they hire several companies that do mass mailings and mass emailings to people that are traders. I get these occasionally, but I've got some fairly decent filters, so they will go right to my trash bin, and I don't have to ever look at them. But this time, one of the things that they did is spend a lot of money on tweeting on Twitter. It's a tweeter. There's a good tongue twister in that somewhere. Anyway, this was one of these pump phases going viral. One of the problems was that they went from 6 or 10 cents the day before to about $4 in one day. And there was no news. Now, how did they do this? This is where these guys are probably going to fry in front of the man when they go in front of the judge, when the SEC comes after them. They probably were selling it back and forth to each other while no one was looking. And they ran it right up to $4 by selling the same one back and forth. So basically, if you do this between a couple of people, it doesn't really cost you a lot. And of course, something goes 6 cents to $4 in a day, you're going to start seeing people start to notice. Anyway, get back, we'll talk about the rest of how engineering a short squeeze and the pump and dump go together. But this one was a beauty. We'll be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, we're talking about CNYK, probably a big story, although it kind of flew under the radar. I think it's a big story and probably one of the biggest from last week, in that it shows two things. One, that the whole Wolf of Wall Street is still alive, but they've figured out since going after old Mr. Wolf that you're much better to keep a low profile and do a lot of these than try to make a giant score. Now, one of the things that they apparently did from my reading over the weekend is that they pushed this stock through Twitter, and it became viral on Twitter, and people started retweeting it instead of just, if you got an email, maybe you forwarded it, maybe you didn't. But apparently people are so used to tweeting and retweeting, this thing got retweeted and became of a life of its own. Of course, it had a big story. It was a website purporting to give you access to big-name stars, CEOs, if you would just pony up 50 or 100 or 200 bucks. So there's the story, and most of these pump and dumps have a great story. But this was a little different. Now, most of the time, these guys try to get away with a couple $100,000 and then walk out the door. That was the problem, though. This thing, they bid it up between themselves. $4. It took off from there, went to 21 bucks. Actually, 21.86 or something I saw was the high tick. Maybe you'd be proud if you were the guy that bought it at the absolute high. I don't think so, though. But anyway, this is when it gets out of control. Now they can't find anybody associated with the company, and, of course, they're going to be going through these trading accounts. Of course, it was frozen and halted trading Friday morning. So unless you got your cash out before then, it's 99% chance it's going back to 99.9% back to 5 cents, probably lower because a lot of people would have gotten caught. So they're going to lose everything. But this is what happens when you get in a bubble market or in a market where most people don't think there is any risk. But this is a continuing on deal. But what they did was they made sure that all the shares, which they own 99.9% of the shares, went into account with margin after they popped it up there. Of course, a lot of people decided that they wanted to short this thing, so they made shares available the next day. They took it out of the non-margin account, put it in the margin account. A bunch of people then decide to go ahead and short the stock, and then they, the next day or 2 days later, put it right back into a non-margin account, and all those folks have to deliver their shares. And they did this back and forth until this thing got up there to all the high. Now, normally you can't distribute into a pump and dump like this on the way up. You have to do it on the way down. And what they've probably done is sold some, but probably not close to the near, 250 million shares or something that was available in the stock or more. It was a god-awful amount. But actually, the SEC might have come in just at the right time. But my guess is that these guys are hiding out and hiring lawyers right now. As long as you keep it low, the SEC, a couple $100,000, probably not going to find you or do anything about it. Yeah, but it hits the news like this, they're going to chase you out. Now, this isn't the first bunch. We've got investor alerts from investor.gov from the U.S. Securities and Exchange Commission. You might want to check this out. But, of course, last month and the month before, it was all about marijuana scam stocks. In fact, a lot of these scammers depend on two things. One, on a bunch of these over-the-counter stocks that don't have to file. They also make sure that these stocks are nickel or dime or something like that. They'll go in and buy a company that someone did and pay them maybe twice as much. So if the stock was worth 5 cents, maybe they buy out the company the next day for 10 cents, and the people, of course, have nothing really there, so they don't care. So the new owners of this thing start working out the pump and dump. But it is a circular reasoning, but it is, trying to figure out how to say this best, it tends to follow it. When gold got hot, there were a bunch of these pump and dumps where they changed the name to gold companies. They had nothing to do, 1 week earlier, they had nothing to do with gold. A lot of these companies that you see in these investor.gov alerts will be the same thing. You see a name change when you're investigating some of these, a huge signal in a penny stock. Look for the name changes. That almost always tells you it was something else. They changed the name real quick and getting ready for the pump and dump. Anyway, we'll be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as always, you can give me a call at 877-927-6648 and take a quick look and see if we got any volume. Nah. Well, we're up just a little off 10 points, and at 1977, 1.78 billion shares on the New York Stock Exchange. Consolidated tape B, as they say. Anyway, just wanted to finish up with marijuana-related investments. You might want to check this out if you're a penny player, but normally, if you want to see if these things are pumps and dumps, watch for the name change, and normally a hot thing like cloud computing or when gold came by or anything else changes. There's all these companies kind of sitting in the wings, shell companies that are all set up for this. But this was somebody in the Tiger's Den actually said it best. It was the springtime for Hitler syndrome. If you've never seen that, both the original and the remake are pretty good. I like the original with Zero Mostel. It's called The Producers, and it's by the same guy that did Blazing Saddles, all that stuff, Mel Brooks. But it is the story of a bunch of hucksters selling 1,000% of a play, trying to make it so bad that no one would like it, that it closes the first night and no one asks for their money back. But what actually happens is, of course, it's so bad that it's good, and they all go to jail. Although it's funny, and of course, one of the most offensive shows ever on Broadway with a play called Springtime for Hitler. It's always good. But I go on. Anyway, let's see what's going on here. Okay, gold had its worst one-day move. I saw it down at 1306 a few minutes ago, I think, marking its biggest one-day drop for a nearby futures contract since December of last year. I'd been warning about this in my newsletter and a couple of times last week that we were seeing many stocks in that sector show signs of testing previous highs on extremely light volume. Not all, but many. And you needed to watch out for those over the next few days. We had kind of an intraday reversal that kind of came back and solved itself. That was the warning. And, of course, now we're seeing the actual move. Now, 1302.20 right now. I've got it on another monitor that's next to me. I'd have to slide over and see. But what else do we have going on? Anyway, part of the reason why, if you haven't heard anybody talking about it, is over the weekend, we talked about this several months ago, India's new parliament and their new controlling, what would you call it, party. It's been pretty much a one-party rule since the 60s in India. Finally, the pro-business, less socialist part took over in March, or won in March. And they've been talking about getting rid of the 10% import duty for gold. Well, everybody in India hates that because suddenly their gold will be less than 10%. So although he floated that for a while, pretty much went away. And, of course, fairly lackluster buying in the actual physical gold market. And we had those numbers over the weekend, and that kind of popped gold down today. We'll see whether there's any more legs. I certainly think that gold is probably ready for a pullback. And some of those stocks are way ahead of themselves for a gold price at $1,300 when the cost of production is just slightly underneath that. The U.S. Secret Service is advising hospitality industries to inspect computers made available to guests in hotel business centers. What we have found out is the old Russians and some other hackers have been hacking these hotel business center PCs with keystroke logging malware and basically getting all your passwords off one PC, kind of the equivalent of old Tom Sawyer tricking all the people into painting the fence for him for Aunt, what was it? I can't remember her name. Aunt Becky. That's what it was. So anyway, it is going to be interesting. Aunt Polly, yeah, thank you. So anyway, just keep an eye on this, but security is still going to be probably one of the bigger things out here. But always make sure you use a secure connection and SSL where you can find it. Free at last, free at last. What we do now know is that Microsoft is responding to Google's Chromebooks that come out for about $200. There had been a lot of discussion about this for a while, so I didn't expect a big move in Microsoft. But basically talking about $100, $200 laptops running Windows. HP is going to be releasing these with a free copy of Windows 8.1 on it this Christmas. Microsoft COO Kevin Turner revealed that over the weekend. And this is going to be basically making very inexpensive PCs, even for the most downtrodden of those here in the United States, are probably going to be able to afford a $200 laptop. But interesting to see that low end, and of course Android and Apple really pushing these, but probably not going to be a lot of excuse for people not upgrading to not at least real fast machines, but at least machines that will adequately run Windows 8.1 and Windows 9 coming out next year. It is a mad market. We've got some questions in the den we'll get to. Oh, boy, this thing is just zooming along, isn't it? What do you... Okay. let's go to them one at a time here. We've got many questions and some emails, so I'll try to get them on here. Let's go back, and then we'll zoom through some charts. Okay, would you kindly share with us Amazon? What is your view that will be driving this back to 408? Secondly, Facebook and Google Wallet. Is Bitcoin some? Okay, bunch of questions. Let's go to Amazon, AMZN. What do you think is going to drive this back to 408? I take it he's thinking back up here to this high. I would be extremely worried about Amazon right now. Many thoughts and discussions over the weekend, especially in Europe, on whether or not these will be regulated monopolies and or termed, for a better way, common carriers in Europe. And I would be watching that very closely. Amazon is being chased around by the French. They had to charge 1 penny to deliver a book because, of course, no one wants anything free in France. And all the bookstores were yelling and screaming on the free delivery of books in France. So they had to change it for a penny because, of course, they made sure that you couldn't charge nothing. So now delivery is for 1 thin penny, whatever it is over there in France. The smallest amount that you could charge. Now, what I'm going to say is the problem that could come out any moment on Amazon. I really haven't talked about it, but Amazon, Google, several of these other stocks that really do a lot of retail business, eBay in Europe, could be facing, but I'm going to go after Amazon as the worst offender, monopolies. If anybody remembered what happened to Microsoft when they were charged with a severe case of a monopoly and the maybe the specter of them actually getting divided into 4 separate companies, which was talked about a great deal. Amazon could be that itself, mostly because of its dominance in the electronic and audiobook sections of the market. They basically have 95, 98% of it. They are beating up on some vendors right now. I think it's Hatchet. And I would be watching very close to see that the same thing does not happen to them that happened to Microsoft. They're probably a little bit too successful, and they've been treating some of these vendors incredibly wrong. And now they're doing something where, since they're still in argument with Hatchet, they're trying to get people to leave Hatchet, a publishing company, and go directly through Amazon themselves, telling them that they will give that company 100, or give the authors 100% of everything that they sell through Amazon, mostly because people like on The Daily Show and what's the guy that comes on after that that's going to have the new show? The Colbert Report, have been yelling and screaming, causing Amazon a lot of problems. But doing all those kind of things, I think, is just digging them a bigger ditch to get out of. But I would not be surprised to see a monopoly filings probably on Amazon, at least on this side of the pond with publishers, and on the other side of the pond on just a general disdain for companies like Amazon, Google in Europe right now. So I would watch for regulatory levels. You had a lot of volume, of course, on Friday in Amazon, and that did break through that 337.50 level with 3.7 million shares. Of course, you had, 8.3 million shares. So it is a valid breakout, but my guess is this thing above 380 is incredibly dangerous, and I'm not exactly sure that probably about 80% of the stocks that are breaking out with volume are closing right back into the trading range within about 5 days. So I don't see that much in these stocks that would make me think more great. Okay, other things out here, yeah. Any thoughts on the semiconductor industry? What do you expect for earnings this quarter? Well, of course, we've got Intel, I think, on Thursday, and that will be the big one. My guess is they come in right in line. SMH, take a quick look. Again, you can give me a call at 877-927-6648, or you can email me at path@tfnn.com or post a message in the den. The question is semiconductors. This thing looks awful close to being priced for perfection. You need $51 broken with 2.3 million shares. Last 2 days, we've had 1 million shares today, 1.1 million shares so far. And you've got to break that $51, so I'll be watching that. But to me, Intel is probably priced for perfection. In fact, while you have some decent volume after the recovery at 31.36 on July 3rd, that nice pop up there. In fact, the strongest volume you had was about 44 million shares. This thing looks more like it's in distribution. You had 1, 2, 3, 4, 5, 6, 7, 8. You're going to have probably 9 little dojis out here today over the next last 7 trading days. To me, this thing wants to probably, after earnings, come back into the $29 range. And so I would probably be looking for a pullback. I'm not saying this thing gets blown apart, but my guess is that after earnings, we're probably going to see Intel at about 29. Stocks that were moving today, we've still got plenty of time. Let's go out here and take a look. Let's take a quick look here. Barrick Gold, of course, off a little bit today. Volume hasn't really picked up so much, but that isn't probably one of the worst offenders out here. Let's take a look at Gold Corp. Now, this one is a good example, not one of the ones testing with 50% of the volume, but another good example of these stocks testing highs on much lighter volume. March 14th, $29.27, 8.5 million shares. Of course, we went through that, closed back below it on July 10th. And we were talking about a reversal day. He had a half-hearted effort back on the 11th, and of course now we're certainly back in this trading level, and there's a gap that's gapped twice now at the 2650 level in Gold Corp, and I suspect it's going to go back down there, and we're going to see. Now, not a lot of volume out here today. We're going to see people pushing it. A downgrade and a warning on GoPro has it pulling back a little bit today. Again, not a lot of volume so far, but of course looking for a great deal of that before the end of the day. Michael Kors, I think we're coming up on earnings on this one. One of the better ones out here, but this thing is in the midst of a huge gap. That gap is on the 4th of February, came up with 23 million shares, so we've been banging against this. First time with 5.4 million shares on April 7th. April 28th, 3.3 million shares. Of course, today, 3.9 million shares today so far. And I'm trying to remember what the news on this one was. To take a quick look at here. Coors. Forgot what the deal was on this. Yeah, we're going to break anyway. I'll look it up during the break. Anyway, plenty of time to get whatever you want back in the back before the break. You can email me, you can call me, or post a message in the den. Be back in a break.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Going to look at NEM real quick. And this is what I was warning about last week, although we didn't look at all these stocks. And we'll look at a couple others that I had in the newsletter this morning. But March 17th, 15 million shares on NEM. Got into it, went above it with 12 million shares on April 21st. Got into the candle with 9.9 million shares on Friday and came back. But those are some of the easier ones to take a look at. I wanted to look at the tests here because there were a few other stocks out here that made me look at this. PASS was one, PASS. I think we talked about this one last week, but certainly one that went above on half the volume, closed back below it. A huge reversal signal on Pan American Silver, PAAS. 3.3 million shares on February 21st, $15.63, 3.3 million shares. Of course, went above it, closed below it, 1.7 million shares. About everything you need to know. And, of course, pretty much pulling back in now. Was the energy all this bad on the way up? The answer is no. But my guess is probably headed to 14 and a quarter, and there's a nice little gap in that one. What else was there out here? GM, GNRC, PPP, PVH. That wasn't it. WFM. Whole Foods. There are a few stocks out here that look like they could be making a bottom, but not a great deal of them. One of the things that you can see is at least a fairly low volume tests. Whole Foods, of course, beat like a red-headed stepchild. back on May 7th when earnings came out, and they said people weren't spending their whole paycheck at Whole Foods. 49 million shares, that gap down. Of course, came into it first time with 7.7 million shares, and we've already exceeded that 7.9 million shares on the 10th, 5.7 on Friday, 5.1 already today. But you've had enough that at least the previous June 3rd low was tested, which means that instead of this thing probably going lower or going higher, probably it's going to base out for a little while, maybe get yet another bounce, and then a pullback, maybe 2 or 3 million share low. Maybe we'll finally see a tradable low off this Whole Foods market. And there's a couple other ones out here. Rackspace, it's come into its gap, but kind of going sideways. This is going to be a tough one to make any money on. We've talked about just how tough it is going to be for someone that doesn't have a big granddaddy like Amazon to continue to be a loss leader. Rackspace, of course, the same business as Amazon's cloud services, but what happens when you have to make money and Amazon does not? We talked about this before it blew up, and just never really caught it. Didn't want to chase it, but pretty tough to go out here and chase. But it could, could you still get a test of 26.18? It's possible. Right now, it is showing at least some modicum of strength back out here at 31.87 from Friday with 5.2 million shares. And, of course, you're in a gap where it did kind of pop back up on good news. That was on the 16th of May, 28 million shares. So, out here with 5 million shares, not a big deal around this $32 level mark. Let's see, GNRC. Let's see if there's anything else I want to finish the day out with. I wanted to see how General Motors did today. Of course, they're talking about huge investigations into what did they know and when did they know it. This one's another one that looks like some low-hanging fruit, but I think you're going to need some really bad news to kick this one in the shins. $38.05 on March 8th. 28 million shares. Came into it with 17 million shares. Pretty much been going sideways. Light volume so far. We'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.